On November 28, 1940, a man who had made and lost over $100 million walked into the cloakroom of the Sherry Netherland Hotel in New York City, and never walked out. He was once called the boy plunger. The greatest speculator who ever lived. A man who broke banks, collapsed markets, and turned nothing into $100 million, multiple times. And then lost it all. Multiple times. His name was Jesse Livermore. And in 2026, over 80 years after his death, traders are still making every single mistake he warned them about. This isn't a hero story. It's a warning, but if you pay attention, it might be the most valuable 15 minutes you ever spend as a trader. On November 28, 1940, a man who had made and lost over $100 million walked into the cloakroom of the Sherry Netherland Hotel in New York City, and never walked out. He was once called the boy plunger. The greatest speculator who ever lived. A man who broke banks, collapsed markets, and turned nothing into $100 million. Multiple times. And then lost it all. Multiple times. His name was Jesse Livermore. And in 2026, over 80 years after his death, traders are still making every single mistake he warned them about. This isn't a hero story. It's a warning, but if you pay attention, it might be the most valuable 15 minutes you ever spend as a trader. By the time he was 20, Jesse Livermore had been banned from almost every bucket shop in Boston. They barred him by name. Some put his photo on the wall. Why? Because he was consistently beating them. And in a bucket shop, when you beat the house stops letting you play. So he moved on. He moved to New York. To the real markets. The New York Stock Exchange. And here's where his story gets complicated. Because the skills that made him a legend in bucket shops almost destroyed him in real markets. In the bucket shop, you traded on immediate price movements. Tiny, fast, reactive. But the NYSE moved differently. Orders took time to fill. Prices slipped. Execution was slow. Jesse's reflexes were tuned to a different machine, and he nearly went broke learning that difference. He lost. He went back to the bucket shops to rebuild. He came back. He lost again. He went broke. He borrowed money. He lost that. He borrowed more. Most people would have quit. Jesse Livermore kept studying. And somewhere between the losses and the obsession, he began to see something most traders never see. The market has a rhythm. And that rhythm is driven by human psychology. Not earnings. Not fundamentals. Not news. Psychology. By 1906, Jesse Livermore was 30 years old, largely unknown, and carrying a debt he couldn't pay. And then, in a single year, everything changed. He started to build what he would later call his method. Let's talk about how Jesse actually traded. Because this isn't just history. These are frameworks that still work if you understand why they work. Concept 1. The line of least resistance. Jesse believed that stocks, like water, always move in the direction that requires the least effort. If a stock is trying to go up and it keeps going up despite bad news, despite pullbacks, despite everything, then the path of least resistance is up. Don't fight it. Go with it. In today's terms, think momentum. Think trend following. When you fight a strong trend because you think it's overextended, you're fighting the line of least resistance. And the market doesn't care what you think. Concept 2. Pivot points. When Jesse talked about pivot points, he wasn't talking about mathematical midpoints on a chart. He was talking about key price levels where the psychology of the market shifted. The moment where buyers became sellers. Where fear replaced greed. Where the character of the tape changed. He would watch a stock for weeks. Sometimes months. Waiting. Not trading. Just watching. For that one moment where price broke through a level that told him the game had changed. Concept 3. The probe system. He would buy a small position. Almost a test trade. If the stock moved in his direction, he added. If it moved further, he added again. If the trade immediately went against him, he cut it. The loss was small because the position was small. But when he was right, he pyramided into the trade. He sized up as the market confirmed his thesis. Add to winners. Cut losers fast. Livermore was doing this in 1910. Now let's talk about the moments that made him a legend. 1907, the San Francisco earthquake and the short of the century. In 1906 and 1907, Jesse noticed something. Union Pacific Railroad stock had been making new highs. But something felt wrong. The tape, the movement, the volume, the character, was telling him the rally was exhausted. He shorted it. Heavily. His broker begged him to cover. His friends thought he had lost his mind. The market was still going up. And then the San Francisco earthquake hit. Panic spread. Markets cratered. Jesse Livermore made approximately $3 million in a single day. That was 1907. Roughly $90 million in today's money. From a single trade. But here's what he said afterward, and this is the part most people skip over. I was not smarter than the market. The market told me. I just listened. 1929, the greatest short sale in history. By 1929 Jesse Livermore was 52 years old. And what he saw in 1928 and early 1929 disturbed him. The rally was parabolic. Everyone was buying. Shoeshine boys were giving stock tips. Taxi drivers were leveraged to the hilt. The psychology of the market had completely detached from reality. Jesse spent months building a massive short position. Not because he wanted the market to crash. But because the tape told him it would. On October 24, 1929, Black Thursday, the market collapsed. And Jesse Livermore was on the right side. He made approximately $100 million in the 1929 crash. $100 million. In 1929. And then, almost immediately, the losses began. Because Jesse Livermore had one fatal flaw. He knew how to trade. But he could never consistently control himself. He ignored his own rules. He listened to other people's tips. He traded when he was emotional. He over-leveraged. He stopped keeping records. By 1934, he had filed for bankruptcy for the third time. $100 million. Gone. So here's the question you're probably asking. Does any of this actually work in 2026? The honest answer is this. The psychology works perfectly. The tactics need updating. The line of least resistance in 2026. Open trading view. Pick any liquid asset, S&P 500 futures, Bitcoin, Nvidia. Switch to the weekly chart. Draw a simple 20-week moving average. If price is consistently above it, bouncing off it, making higher highs, the line of least resistance is up. Stop looking for shorts. Stop being clever. Trade with the trend. This is almost laughably simple. And almost nobody does it consistently. Livermore's probe system in modern position sizing. Start with 25% of your intended position. If the trade moves in your direction by 1 ATR, average true range, add another 25%. If it moves another ATR your way, add the rest. If your initial probe immediately goes against you, cut it. Your loss is tiny. Your ego might hurt, but your account doesn't. The key modern limitation. Markets are faster, more efficient, and more correlated than in Livermore's era. His edge came partly from information asymmetry. You won't have that. But psychological asymmetry, that still exists. Most traders still panic at the same moments. Most traders still chase. Most traders still break their own rules. That's your edge. If you can hold yours. Jesse Livermore wrote a book in 1940. One of the greatest books on trading ever written. He called it How to Trade in Stocks. He finished it just months before he died. In it, he laid out everything. The rules. The psychology. The method. The warnings. And then he broke every rule he had ever written. The markets didn't kill Jesse Livermore. He did. Not because he wasn't smart enough. Not because he didn't know the right things to do. He knew exactly what to do. He just couldn't make himself do it, consistently, under pressure, when it counted. In 2026, you have tools Jesse never dreamed of. TradingView. Backtesting engines. Risk calculators. Access to information in real time from anywhere on Earth. You have every tactical advantage he lacked. What you don't have, what nobody gives you, is the psychological infrastructure to use those tools under pressure. That's what you have to build. Rule by rule. Trade by trade. Loss by loss. Jesse Livermore left a blueprint. It's written in profit, in loss, in marriages destroyed, in bankruptcy courts, and ultimately, in a hotel cloakroom. You have the blueprint. The question is whether you'll actually follow it. If this video made you think differently about how you trade, or why you trade, drop a comment below. Tell me the rule you break most often. Be honest. This channel is a space for brutal honesty. If you want to go deeper into the psychology of elite traders, subscribe. We cover the real stories. The wins, the collapses, and the lessons the textbooks don't teach. Because in trading, the most expensive education isn't a course. It's the trades you make before you understand yourself. The game of speculation is the most uniformly fascinating game in the world. But it is not a game for the stupid, the mentally lazy, the man of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. Jesse Livermore, 1940.